Well, good morning. This is Thursday. My name is Daniel McCrane coming to you live. I'm with McCrane Associates, and small business owners choose to work with us to increase their profitability, expand their scalability, and solidify their legacy, guaranteed. So, today, let's talk about the importance of making sure that you have financial transparency during a transition of your business. Now, first of all, you might think, okay, well, yeah, there should be some financial transparency there for sure. But to what extent? And you would actually be surprised. Anyway, I'm getting ahead of myself. So let's talk a little bit about why this is so important. There are some reasons that you want to keep financial transparency as the seller of the business, and it's for a couple of different reasons. So the first one is that it builds trust with the seller. So the seller's coming in. I'm sorry, the buyer is coming in. And the buyer, of course, is going to be very skeptical about the business. They just want to make sure that they're buying a good deal. That's the most important part there. So if you can be transparent about your financials, then the buyer is going to be much more confident about moving forward to purchase the business from you. Another reason you want to have financial transparency is because it solidifies and it backs up the reason why you've set the price for your business. So when the buyer looks at your business, then they can see that the financials actually justify the price that you're asking for the business. So that's another good thing about financial transparency. And because of those things, then because you've got the trust, because the buyer agrees that the value of the business is what you say it is, this can speed up the sales process. Now, the other important part is we haven't talked about this, not just the buyer, but if there's a banker involved, if the buyer is getting a loan, the banker can take a look at the financials and be very pleased. They can trust you if they see the clear financials. The banker then can agree that the value of the business is what you're asking for. So this definitely speeds up the sales process when you're doing so. So, how do you go about ensuring financial transparency in your business? Well, a couple different ways to do that. One is to make sure you've got really clear documentation. So, tax returns, profit and loss statements, balance sheets, and cash flow statements. Those are the things that a buyer is going to want to see. Specifically, a banker is going to want to see those kinds of things. They're going to want to make sure that you know exactly where every dollar has gone over the last several years. That brings us to accurate reporting then. So this is something that you want to be very clear on as the seller of the business. It is very common. Everybody knows this happens. You have the business pay for certain personal expenses of yours, which is perfectly fine. You can do that. The company has a truck. You drive the company truck. You put gas in the truck out of the company bank account. All of that's perfectly legitimate, and those things get added back in, then that's what we call seller discretionary earnings. So you don't take that money as income. You have the business pay for some of those expenses on your behalf. Now, when you're getting ready to sell the business, though, what you need to do is begin to take those personal expenses out of the business so that you can show exactly how much profit the business is making. And because buyers and bankers want to see the last 3 years of financials, you need to start turning your accounting and your bookkeeping around 3 years before you think you might want to sell the business. Otherwise, somebody might look at the business and go, there's no profit in this business. I don't want to buy it. Whereas the business has been paying for your expenses, there's plenty of profit there once you take those expenses and you add those back in. Um, Making sure that you've got those reports ready to go and that your books are in the right shape is very important. Don't do what sometimes in the brokerage office we see this happen. Somebody comes in and we ask for their financials, and all they have is they just they scrawled some numbers on a piece of paper. Said, nah, I think it's about that. I think that's what I made. That makes it very, very hard for the buyer to trust you, to agree that the business is worth what it says, what you say it is, And if the buyer's going to get a loan, you can bet the banker will not loan money on financials that look like that. You have got to invest some time into some bookkeeping and accounting and get some real reports to make sure that you're showing that financial transparency. All right, everyone. Enough said about that. I'm going to stop there. So